So there are many price action chart patterns, and they will always be relevant since when using them, trading decisions are made based on the analysis of a price charts and understanding the logic of a chart movements. So today, let us get familiar with the best price action patterns that we can use in trading. So, starting with the pivot point reversal FX pattern, which is PPR in short. So price action trading patterns are good in the way that they are simple to discover and trade. So this is the price action FX setup pivot point reversal, or PPR. So this pattern consists of 3 bars. It is based on the pivot levels or strong support and resistance levels. It usually appears after a fast trend. In a bearish scenario, the price is moving up and hits a new high. The next bar follows by making a lower high and lower low and closing below the prior day's low. So in a bullish scenario, the price goes down and hits a new low, and the next bar's low shouldn't be lower than the previous low, and the bar shouldn't close higher than the previous high. Therefore, there appears an entry signal. So you can enter right after the signal bar closes, as the market has already signaled it is about to reverse. And so this is a reversal pattern, as you can guess. It is good to trade at the end of the correction, opposite to a strong trend of a global degree. A stop loss is put beyond the highest or, of course, lowest point of the pattern. And the examples of real trading charts are, of course, over here. Sometimes you need to wait for quite a long time. In this example, the PPR pattern has formed in the resistance zone between 1002 and 1001. So next the price sharply falls, we can see that, which yields a significant profit. And in candlestick analysis, a similar pattern is called an evening star. So next we have the dagger price action pattern. So a dagger price action pattern is a relatively new pattern. The signal appears quite rarely, but has a high statistical probability of working out. The pattern signals the trend continuation. So the dagger pattern means using 2 time frames for trading, a shorter and a longer ones. So you could try the following combinations. Firstly, you have the time frames like weekly, which is W1, and the daily, which is the D1. Then we have a daily and 4 hour, which is D1 and H4. And then we have 4 and 1 hour time frames, which is H4 and H1. So the shorter the time frame, the more dagger patterns will appear, but most of them will be false due to the market noise, of course. Okay, conditions of a buy pattern. Number 1, a large bullish candlestick forms in the longer time frame. Number 2, the next candlestick closes above the 50% Fibonacci retracement level of the first candle. The second candlestick shouldn't not close beyond the first one. Number 3 point, the shadow of the second candlestick should not break through level 61.8 of the same Fibonacci retracement. Point number 4, in the shorter time frame, a candlestick forms with the lower shadow equal to or longer than the candlestick's body. Point number 5, the trade is entered at the breakout or the rebound candlestick's high. So, point number 6, a stop loss is set below 50% retracement level in the longer time frame. Point number 7, of course, we go to take profit, which is set according to your trading system or at a strong resistance level. Another option is to set a take profit at a distance 2 or 3 times longer than the stop loss, which is the one thing that I like to do the most often. So, of course, we had the buy conditions, now sell conditions. Number 1, a large bearish candlestick forms in the longer time frame. Number 2, the next candlestick closes below the 50% Fibonacci retracement level of the first candle. The second candlestick should not close beyond the first one. Number 3, shadow of the second candlestick should not break through level 61.8 of the same Fibonacci retracement. Point number 4, in the shorter time frame, a candlestick with an upper shadow equal to or longer than the candlestick's body. I will call it a rebound candlestick that marks the price rebound from the resistance level. So, point number 5, the trade is entered at the breakout of the rebound candlestick low. Point number 6, we go to the take profit and stop loss. So first, stop loss is set above the 50% retracement level in the longer time frame. Point number 7, a take profit is set according, of course, again to your system or at a strong support level. And again, another option is to set a take profit at a distance 2 or 3 times longer than the stop loss. So this basically is more or less up to you how you decide to set your take profit. So, as for important notes to trade a dagger pattern, we must remember that the pattern appears quite seldom. That is why you should act cautiously and filter patterns in the chart to meet the conditions specified a second ago. So the signal candlestick in a shorter time frame should form within the range of the next bar in the longer time frame. For example, if the longer time frame is D1, which is daily, the signal candlestick in the shorter time frame H4 should form during 6 candlesticks after the conditions in the longer time frame are met, simply because 6 multiplied by 4 means 24 hours, which is 1 day. So if the longer time frame is H4, the signal candlestick in shorter time frame H1 should form during 4 hours. Again, 4 times 1 is 4 hours. So you get the idea. Otherwise, the pattern will be irrelevant. An additional confirmation will be a strong general trend corresponding to the trade you are going to enter. For example, an uptrend for a buy trade. Okay, now we move on to indicators. Good assistance in trading is provided by the price action indicators. It can be used by both newbies, of course, and professionals who are engaged in candlestick analysis. Indicators are one of the primary and necessary trading tools when you build a trading system. Unfortunately, there is not such a free trading indicator that will indicate all the price action patterns, but there are a few price action indicators that discover the major and most common price action patterns. So they can be well useful in the analysis of a price chart and anticipation of the next price moves in FX. So let's check them out right now. First one is pin bar indicator, which is, I need to add, is free to download. Of course, the links are in the description under the video. And the indicator can be downloaded, as I said, in the section in the MQL5 community. It displays all pin bars that can be discovered in the chart. And your task as a trader is to additionally filter the indicator signals, define the support and resistance levels, and the trend line after that. So you can trade the pin bar, but only provided you follow the rules of your trading system. You can use the default settings of the indicator, or you can modify the original values. And this screenshot displays the pin bar indicator where the following parameters are set. You can see them right now. You can also change the signal colors as you like. So this price action indicator is a simple supplementary tool. Now, next we will have the DI simple price action indicator. So this indicator of price action patterns discovers simple setups in the chart and marks them for us. You can choose the option when only particular patterns are displayed. This software can be free, downloaded in the App Store of the MQL5 community. The indicator determines the following patterns. We have, for example, inside bar, then we have the BUOVB, which is the engulfment pattern, BEOVB, again, engulfing pattern, DBLHC, DBHLC, and pin bar. Basically, those are shortcuts of price patterns. Those are shortcuts of price patterns which you can Google later. If you are going to base your trading strategy on this indicator, you should apply supplementary tools again to filter the signals or for buy or sell trades. And any trading signal sent by the indicator should be traded wisely. Then, next one is the railway track indicator, which we discussed not so long ago. As it is clear from the name, this indicator discovers a railway track pattern in the chart, and this chart pattern, which again you can simply Google, in a nutshell is a reversal pattern that appears most often on the correction in the primary trend. So you should trade this pattern at the end of the correction. And the indicator displays the reversal patterns as up or down arrows. It also displays the target profits as lines. To get it, choose in the settings the following option: show target equals true. Okay, next one is price action dashboard. So the indicator identifies in the chart the following patterns, which is the price action pin bar, double bar, vertical bar, and their combinations. This indicator is interesting because you can set the list of the instruments and timeframes tracked by the indicator to discover the patterns. When one of the listed patterns appears, you will see the notification that you may enter a trade in a particular direction according to a certain pattern. You can also adjust the indicator to send the notification to your mobile. So now, let's have a look at the settings of this price action dashboard. So in the settings tab, you should type the symbols that should be analyzed by the indicator. Next, you need to specify the timeframes where you will track the patterns. Other settings refer to the visualization of notifications and alerts. And so the indicator looks like this in the chart. At the bottom, there is a dashboard where all the current price action patterns are displayed for the instruments that you specified to monitor in the settings. However, this indicator is worth the attention of any trader. I'll leave the link to it in the description, but you also need to remember that I am not affiliated, or Litefinance is not affiliated with any of the authors of those indicators. Not all of them are free, but you can, for example, download the demos or rent them for a month or two. So basically, yeah, there are various options to use them and check them out. Now, going forward, next one is the well-known Fibonacci indicator, also referred to as the Fibonacci retracement levels, which is a basic tool included in most trading platforms by default, I think even in all of them. So the Fibonacci retracement is drawn on the chart from low to high in an uptrend or from high to low in a downtrend. So it indicates areas where the price may correct. So the standard retracement levels for the indicator are 23.6%, 38.2%, 50%, which, by the way, is not really a Fibonacci number. But then we have 61.8% and 100%, which again, as you can guess, is not a Fibonacci number, but it is included in the indicator because one is 50%, which is a half of the retracement, and then it is a full retracement, so those are strong levels. So in a strong trend, the correction is usually shallow and often reaches only the 38.2% level. In most trends, the price corrects to the levels of a 50 and 61.8. And this chart displays a moderate downtrend in the XAUSD, which is gold. So let us have a look at the first descending impulse that started on March 8th, on Women's Day 2022, and finished on March 29th, 2022, of course, again. So I attach the Fibonacci indicator to this wave. The level of 100% is at the high of March 8, the level 0% will be at the low of March 29. So in an uptrend, level 100% will be at the low and 0% will be at the high. So starting from the March 30th, the price started a correction, following which it tested the resistance zone between the Fibonacci retracement levels of 50% and 61.8. Next, a pin bar appears, following which the downtrend resumes and the price broke through the low of March 29th. Note that the pin bar closed exactly under the level 50%. It means this level was, we can say, protected by sellers. As for trading clip, I could add that you should expect a corrective retracement greater than 50%. Then wait for the price action trading signals we discussed earlier. And after price tests the Fibonacci retracement levels and then forms a price action pattern, there is a good chance that the trend will continue and your trade will make a profit. So, another one is the Relative Strength Index indicator. RSI is a momentum used in technical analysis, and it gauges the speed and strength of a security's recent price changes and shows if an asset is overbought and oversold zones. I know that most of you guys know this indicator, but for the people that are not familiar with it, let's briefly discuss it. It allows a trader to enter trades on the correction, counter the trend, and make profits. The relative strength index measures where the price is in the terms of its 14-day period price range. An asset is usually considered overbought when the RSI is above 70 level and oversold when it is below 30 level. So when the RSI is below 30, the price is in the lower area relative to where it traded in the last 14 periods. So when the indicator is above 70, the price is in the upper zone relative to where it traded in the last 14 periods. So traders often wait for price to exit those areas to confirm trades. So when the market is actively growing and the RSI indicator enters the overbought zone, traders will wait for the indicator to go down from this area and then consider selling a security on a correction. Conversely, when the market is actively falling and the RSI indicator enters the oversold area, traders will wait for the indicator to exit this area upwards and then consider buy trades in the correction. So the main idea of this approach is that the price in the market will always tend to an equilibrium state, which is the balance state. So let us have a look at the gold chart in October to November 2021. So starting from October, the gold price was actively rising. At some point, the RSI reaches the overbought zone. On November 16th, the indicator exits the overbought zone and a PPR pattern forms in the daily chart. So this signals a sell entry. Next, the price falls down to the support level. And as for the trading tips, expect the market to enter the overbought or oversold zone first. Next, wait for the indicator to exit the zone and look for a price action signal to identify an entry point. And so, if we had RSI, then now it is time for another very popular one, which is stochastic oscillator, another well-known. So a stochastic indicator is also used to determine the overbought and oversold states of the market. So it is an oscillator that presents by default in most trading platforms, and again, I think even in all of them. So the stochastic can be used to define the trend pivot points or to confirm entry signals. It is used similarly to RSI. There are two lines on the stochastic indicator, the stochastic and the signal line. And the signal line is a moving average of the stochastic, so it moves more slowly. So the trader can monitor the stochastic changes by watching its signal line. And so if a bidder plans to enter a sell trade, they should expect both stochastic lines to exit the overbought zone. If you add the stochastic oscillator to the previous chart with the RSI indicator, you will see that the stochastic gives more or less the same information. So, guys, that will be all from my side for today. Of course, I will make more videos on the price action, so be sure to follow the channel because we didn't discuss full strategies with the price action in combination with other analysis methods, or for example, how you can scalp using price action. So, till next time.